I think private credit for stablecoins is that's often referred to as the holy grail for stablecoins to if somebody can like crack the code on that.
GM, good morning. Welcome to the Milk Road Show, the daily crypto show that refreshes faster than you can panic refresh your portfolio. Yikes. I'm your host, Jay Hamilton. It's Monday, April 7th, and wow, markets. There's two questions on my mind right now, and two questions on everybody's mind, I know. First question is, what the heck is going on with macro? What's going on with tariffs? What's going on with the US economy? What is Trump going to do next? And how does that lead to price action and short term what we expect to see as a result of the macro setup? That is not today's episode. That is going to be tomorrow's episode. We got Kyle and Capital Flows coming on the episode to talk all about macro, tariffs, and everything there. Today's episode answers the second question on my mind, which is, when macro lines back up and we do re-enter the bull cycle, which I remain bullish that we will this year, when that happens, which sector in crypto is going to rally first? Of course, Bitcoin will run first. We all know that. But after Bitcoin, where are we going to see a run? Now, obviously, when I think about that, I think about two things. One, I think about there's a narrative shift happening right now from pumpamentals to fundamentals. There's a narrative shift happening as a result of institutions entering the space, more institutional dollars. So that leaves one natural place to look, which is which projects in crypto are making the most revenue. The ones making the most revenue, they have the best fundamentals. They are the most attractive to institutions and corporations as they come into the space. And the other question that comes up in my mind is, which narrative is the narrative that's the hottest and going to be the hottest in crypto? And right now, it's stablecoins. So today's guest is one of the top 10 revenue generating crypto projects in the world. They're also all in on stablecoins. I'm talking about Sky, formerly Maker. They're the third biggest stablecoin behind Tether and Circle, but they're very different than Tether and Circle. Today, we're joined by Rune Christensen, founder and CEO of Sky, to talk about Sky's path to generating $1 billion in profit in the future. Now, if you guys want to talk to me every day before we get to Rune, you can talk to me every day in our Telegram group. Hit the link in the show notes. Join our Telegram group. Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. Also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Rune, welcome to the Milk Road Show.
Thanks for inviting me.
Absolute pleasure to have you, my man. So right now, estimated annual net revenue for Sky of $84 million, total revenue around $350 million, and then expenses, obviously. Let's jump into these numbers, Rune. At a high basic level, can you explain these numbers to us and get us an idea of how you guys are so profitable and generating so much revenue? It's incredible to see.
Sure. I mean, the most important to look at is, of course, the stability fee income, which is like the general revenue of Sky. And that is really basically the return generated on the collateral portfolio behind the around 8 billion or so stable coins in circulation. So yeah, what we call USDS, and really it's USDS plus DAI. As you were saying, like nowadays we consider DAI to be backed by USDS. So it's really all USDS in terms of like the internal workings of the system. And it's backed by a portfolio of actually mostly USDC. And so around 50% is USDC, and then another quarter of that, like a quarter is crypto collateralized loans, and then a quarter is treasuries. That's an oversimplification. Like it's a little bit more complicated than that, but that's just like to put it very broadly. And on this collateral, the total that's being generated, well, the estimate is then this, whatever, the number being shown here. That's actually like it's actually quite low when you consider that it's 8 billion. And the reason for that is the large amount that's sitting in USDC that is not currently deployed. And it's a part of like the whole sort of launch rollout of Sky, that Sky is really like switching into a new mode of operation where it can deploy the collateral much more effectively through these agents called stars that basically sort of deploy the collateral on behalf of Sky. But right now that process is still underway. So a lot of the collateral is just not very efficiently deployed, and it's just sitting as USDC, earning the institutional reward through Coinbase custody. But then the reason why the profit is so high, when you look at the the stability fee, which is earned on the collateral portfolio. Then you look at the savings rate, which is basically what Sky is paying out on USDS, right? So Sky both generates a return on the collateral from basically other protocols and other counterparties providing a return to Sky. And then Sky also provides a return to the holders of USDS through the Sky savings rate. And actually, like, the difference in what Sky is generating, how do you call that? So the marginal return is actually negative in a sense, in that Sky is actually paying it's paying out more to the people who get the Sky savings rate than it is earning on the USDC that it has sitting in this, like, in the portfolio right now. Yet the savings rate expense is, well, about half of the stability fee income. And the reason for this is actually, like, what I think is, like, this is what I tell people about the most important thing, stablecoins, the thing that make it such an attractive business model, and I think the most attractive in crypto. And that's what we call breakage, even though it's not an entirely correct use of the term. But we just use that to describe stablecoins that are sort of irrationally choosing not to generate a return, right? So there's a huge amount of the USDS in circulation that is not earning the Sky savings rate. And then what happens is Sky gets the full Sky savings rate on those stablecoins. And that's kind of like the reason behind the massive profit.
What is the number of how much Sky gets the savings rate and how much doesn't go to the user but goes back to Sky, and why is there that difference?
Yeah, so the numbers are, like, it's roughly that of the DAI. So there's about 4 billion. Okay, very rough numbers, right? There's about 4 billion DAI in circulation, and only 1 billion of that gets the savings rate. So that leaves 3 billion in breakage, like 3 billion in, like, sort of unrewarded DAI.
Mm-hmm.
And of the USDS, I believe the unrewarded number is around 500 million, which, that's the thing to me that is, like, totally surprising. And that I was really surprised to see that even with, like, a brand new stablecoin that has a lot of, like, sophisticated, like, institutional users, somehow there's still, like, it's by far, like, that's the thing that makes USDS itself, like, a huge success, is that there's already, like, a huge amount of the stablecoins that are not earning the reward. And this is really, like, the driver of, like, all the kind of the surplus that a stablecoin can generate, is that there are these stablecoins that are choosing to not to forfeit the return, basically. And one explanation for why this is happening is that it's like human behavior, first of all, right? So it's, like, irrational, sort of like humans kind of sort of taking the time to do stuff instead of, like, obsessively optimizing everything they can, right? But it could be something like it's being used for payments, and then as a result it's sort of sitting around in an account for, like, a couple of weeks, and then you send it. Or it's like somebody acquired the USDS and then they intend to put it in the savings rate, but they also, like, waiting a bit with that because that's another transaction or something like that. But it's actually, like, hard to explain exactly why it is and why the number is so high. It's just something that is practically absurd. And I think, like, in general, it's considered a sign of health for a stablecoin to have this, because, it's very easy to just, like, provide a very high rate of return and then get, like, a huge number of, like, circulating supply. But if it's, like, mercenary capital, it will go away as soon as the supply goes down, right? And obviously, if you look at something like Tether, right, like this sort of the golden goose of stablecoins, right? Like,
Mm-hmm.
that's a stablecoin that literally never ever has paid anything to anyone, yet people love it to use it, right? And that's really because it has that, like, it's just like a product. It's just has like a really good user experience. And the fact that you're seeing this with USDS as well means that it's already gaining some level of this kind of, like, product characteristic to it. Quite a lot of the line item that is called expenses here is actually also a savings rate related expenses. So in reality, like, the sort of, like, the contributor expenses and, like, the budgets are actually not at 100 million, while the savings rate expenses are actually higher. And this is because some of the savings rate expenses are paid through a different mechanism called the integration boost, which is like a Sky savings rate integrated into, like, Aave and Camino and Drift and Solana and some other platforms like this. So yeah, I just wanted to point that out. But then, like, you put it all together and you get basically the net revenue, which is which is all made possible because of the breakage, right? Like, if you didn't have that breakage, like, if you didn't have that, like, several billion USDS that is unrewarded, and as a result the reward goes to Sky, there would be not really any room to pay contributors at all. I don't actually know the exact number. I think I would guess it's like a couple of like tens of millions lower in terms of what are the actual contributor expenses, which is a massive budget, right? But that's also what has allowed the transformation into Sky, and what's going to then like set up the ecosystem for the next wave of really starting to get efficient with generating return on the collateral portfolio.
Okay, I want to go to my main next question is who's going to win the stablecoin race? And so we have 234 billion in stablecoin market cap right now. We have Tether around 144 billion. We have Circle, which just announced recently that they filed for their IPO. They're at 60 billion. And then we have Sky combined, if you combine Sky and Dai, around 8.5 billion, and then Athena and the rest down the list. It's still early. Tether definitely has a lead, a significant lead that will be hard to catch up on, but it is certainly still early in the stable coin game. When we look at the future of stable coins, what's the difference between Tether, Circle, and Sky, and what's going to set up one of these to ultimately win the stablecoin race?
So first of all, the most obvious kind of distinction to make is really to categorize like USDC and USDT. They are like classic centralized stablecoins, while USDS is like a classic decentralized stablecoin. And the thing that sets them apart is that USDC and USDT, they're like heavily focused on regulatory integration and kind of like in the trenches kind of adoption and growth work done by like their issuing companies, while a decentralized stablecoin is typically about delivering a savings rate and kind of building this sort of robust and transparent backend that allows for allows you to actually deliver a savings rate effectively and run the kind of infrastructure more effectively. So again, like a scalable and sustainable savings rate can be delivered to the users.
What is the savings rate right now? Just quickly while we're talking about it.
So right now it's 4.5% on USDS. Yeah, and as I mentioned earlier, it's actually higher than what you can get it with on the USDC in the portfolio. So it's sort of it's currently being subsidized a bit by Sky, but that is entirely because in this like transformative period where Sky is preparing to more effectively deploy the collateral portfolio, it's worth it to keep the rate attractive because the system will be able to actually generate this type of return organically in the long run. And that's what sets it apart from USDC and USDT, right? Because with USDC you can also get a return on USDC on Coinbase, for instance, but it's ultimately restricted to be what you can get with T-bills. And this is fundamentally like it is like the approach of like Circle and of the centralized stablecoin has been to kind of not really compete on like the collateral or like on the kind of what's actually like what the currency itself, what the stablecoin itself is kind of made of, but instead really compete on the distribution and how it's used. And a decentralized stablecoin is more the other way around, where it's like it's more about what is it made of, what is actually sort of the source of stability and the source of the return for the stablecoin, and then making that really easy to access without having the capability to put as much effort into actually getting that like adoption. And in particular, where this like matters the most is when it comes to regulatory capture, right? Because you basically have these like centralized stablecoin biased bills coming out in Western countries at least. And that's really, that's not just, I'm not going to say that that's like entirely because the centralized stablecoins like lobbied for this. It's also because this is naturally what Western governments want, because they really want financial control, right? That's how I would sort of compare them to each other. The question is really whether like having a sort of like, is it better to have sort of lots of like this sort of early edge of having very broad adoption and lots of liquidity and lots of like usage by what I would say by people effectively, while if you look at a decentralized stablecoin, in some ways it's sort of more optimized for machines. And that's really how I see it, that like it doesn't like conform to like regulations created by a bunch of human politicians. Instead it's like, well, how can I generate the best possible return, and how can I represent that as like a higher savings rate that ultimately is sort of hyper rational actors will respond to. So like, well, like institutions that are able to deploy into something like decentralized stablecoins, but then like AI agents and companies that are using AI tools of the future and so on. And also like the developing world, where there's also more like freedom around like, I'm going to do what's best, not what some rule or some like paperwork tells me is what I should be doing.
Mm.
So it depends on which one of those you're betting on. And I obviously think that in the long term, things will be incredibly driven by AI and also the developing world, and also like that there's this general Western decline. So even though Tether and USDC have a massive head start and just an incredibly, really hard to overstate how valuable it is to have as much liquidity as those stablecoins have, they're sort of like constrained ultimately by what I would call like a human constraint that a decentralized stablecoin doesn't have, and that potentially lets it be more suitable as like a currency for machines and for AI agents of the future.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise. MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer, network and ecosystem fees apply. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions, CYCSUSDL is gaining traction at milkroad.com/Coinshift. So much to unpack there. I want to touch on machines and AI agents, but I'm going to put that to the side for a second. We'll come back to that. The one thing, in the end, people are going to, a certain sector of people are going to go with stablecoins to wherever the best yield is, the best risk-adjusted yield is. It doesn't mean everybody's going to go to the newest stablecoin that's promising a 40% APY. It's going to be the best risk-adjusted yield where everyone goes. We hold in our treasury, a good portion of our treasury is in USDS because we believe that it is the best risk-adjusted yield in the space. When we look at capital efficiency, I think this is an important thing. And so I'm going to bring up this tweet from Sam McPherson, who's the founder of one of Sky's stars, Spark. And he came on the show previously. And he made this great point. When Circle put out their IPO filing, they had to release a bunch of their revenue documents. And they showed that they made $155 million in net income on 33 billion of supply of their stablecoin in 2024. Sky was at 95 million in net income on 8 billion. So that's 2.5 times improvement on capital efficiency, well-paying yields. Like the Circle wasn't even paying yields, and they're less efficient. How? This is a big question, so you can hopefully summarize it or keep it high level. But how is Sky able to be so much more capital efficient than Circle in this case?
I mean, it comes down to that. Despite the fact that Sky and like Maker historically is sort of known as having extremely huge budgets, and which it does. I mean, it does feel like, So let's say it's 80 million or whatever it is in expenses per year currently. That is that is actually a massive budget to me, and it's kind of crazy huge. But considering how much income is being generated because there is that 8 billion, then it's actually not that much. And ultimately, and this comes back to the breakage I was talking about earlier. And by the way, actually, fun fact is that so Circle it doesn't pay yield, right? But it pay like sort of rewards, mainly through Coinbase. And I think so. I just heard that from the filing, you could actually see that it appears that their breakage rate is around the same as Sky's, actually, that it's about half. So about half of the. I mean, I'm oversimplifying. So, but at least it's sort of in the same kind of ballpark, right? Which I think is kind of interesting that happens to be the case, because that seems sort of, I don't know what would explain that, because clearly USDC is so much more focused on that super broad distribution, right? To humans, while Sky is actually trying to be ultra efficient and eventually be able to kind of like be the. I mean, and that's kind of funny that the way I think of this is that Sky needs to be so efficient that our target market, like our ideal customer, is mercenary capital. That's how I see it, right? That like it should actually be possible to Sky, and Sky should be sort of the only system that is capable of like handling unlimited amounts of mercenary capital and always actually profitably deploy that somewhere and then charge just a tiny profit margin on that, right? And and that efficiency comes from, it comes from blockchain. It's decentralization, it's transparent systems, and then it comes from the stars, right? So from the system that basically is like the kind of the driving force behind the transformation to Sky is splitting up Maker from like a monolithic DAO into this like competitive ecosystem of independent agents that just are able to like operate as kind of like a swarm or like a flat structure without requiring top-down control, but using incentives instead to sort of align and collaborate without having to directly cooperate and interact and organize and politic and that kind of stuff that ended up happening in the large DAOs. And then the last layer on top of this is then applying AI. So you have this like competitive environment of like many different innovative stars that are all able to sort of move in different direction and exploit different opportunities. And they have total transparency, strong and resilient and efficient infrastructure, and then lots of data. And then they apply AI tooling, open source AI systems, closed source proprietary stuff, pretty much anything to get a competitive edge, which then rewards the stars individually, right? So everybody's just like chasing their own self-interest in trying to deploy the collateral as effectively as possible. But in doing that, basically they also like drive out of the efficiency of the system as a whole, right? Because they sort of constantly compete on like finding new alpha, finding new advantages, and that then like erodes the old ones and sort of, I don't know what to call it, like socializes or sort of like, yeah, like generalizes the old alpha that sort of becomes just like base returns for the whole ecosystem.
Yeah, not to overly simplify stars because it is a truly an incredible structure that has been set up that is really revolutionary and leading the formation of how DAOs can be formed and the future of decentralized permissionless governments and operations at this scale. But to overly simplify it, you have this model where you can provide collateral to a founder and they can go out and figure out ways to get stronger yield on that collateral and feed it back into Sky. And if it works, then they will be rewarded and they will win and they will have a successful business that operates within the Sky ecosystem. If it doesn't work, then they will lose and they won't stick around. And so it is an incredible model that is really just in the first inning, maybe. Like, it's so early for your rollout of the star system and the star ecosystem. Really, there's Spark, and that's really the only fully formed star right now. There's many more stars to come, and so it's going to be very exciting to see that. One question I want to come back to is, so you mentioned that that Circle and USDT are very focused on the achieving more liquidity and more distribution and more adoption, as really as a focus on the traditional markets and regulation. How does Sky increase its money supply? What does it need to do in order to achieve adoption?
So the kind of base strategy is actually also simply entirely just incubate a lot of stars and let them figure it out, basically. So, I have had a lot of ideas over the years, and I think there's some like general sort of broad thesis of, one thing is just have a very effective savings rate. That's obviously the most important one.
Mhm.
But there's also, and in the past, there's been these like targeted things of like focus on Latin America, focus on remittance, try to integrate with payment processes and so on. The thing is that what like Maker as like this monolithic DAO was always very bad at executing on this stuff. So the idea is with the stars, what is instead being used is something called the accessibility reward, which so just like the allocation system, which you just discussed, which is this mechanism where a star can basically put up collateral and then use that to generate USDS out of Sky, and then acquire more collateral and kind of take the first loss on all this exposure they have, and ultimately what they get is cheap leverage, but in return they are constrained to like ensuring they're providing a very good risk adjusted return back to Sky. So then like if they're successful, they get the upside, and if they fail, they're wiped out first before Sky take any losses, right? And the accessibility reward is sort of a similar type of, creating an incentive that makes staff founders, selfishly chase upside and just have them try to make money by growing USDS demand. But then in return for growing USDS demand, they get this, what works kind of like a referral system, which is called the accessibility reward, that basically gives them like a part of the spread of basically the profit that Sky would earn if there wasn't a star kind of being the funnel for the user. Now, I mean, so there's not too much of that it has been like that's live just yet. I mean, there's obviously Spark that has done a lot of like campaigning and attract a lot of users to its front end, and I think is like a part of like the growth. There's been this like pretty major growth of USDS from around like so DAI was sort of stagnant around 4 to 5 billion for many years. Then with the USDS now it's at 8 billion. So that's actually been a huge success story because it's been like a pivotal sort of turnaround of like proving that, okay, it's actually possible for Sky to keep growing the supply, and we're not sort of stuck just like living off the past glory of the original like growth explosion that happened way back in like the early 2020 and around that early age of DeFi. But yeah, like so what's gonna come next are stars that are focused on each of these different thesis, right? So there could be a star that aims at growing adoption in Latin America, and then that's just like the sole focus is like produce like Spanish content and produce websites that are optimized for Latin American users, integrate with on ramps in Latin America, and something different could focus on like, I don't know, use in like remittance in Southeast Asia or savings in Africa or something, right? So this is like the really classic thing that the community in the early days of Maker was totally obsessed with, this kind of like boots on the ground, last mile type of stuff. In reality, I'm not sure that's necessarily going to be a big driver of USDS, but it's like, but the great thing is, it's not up to me. Like, it's not up to anyone designing the core system. It's entirely up to the stars, right? They get to decide what do they want to bet on. They have to put up their own capital, ultimately, right? They have to raise capital somehow. They have to put up their own capital, invest into creating a star, creating a marketing strategy, a marketing campaign. Then if they get a lot of users, they're going to be set up with some really nice sort of sustainable cash flows, because if they own the user, they just as long as they have the user doesn't feel any difference. Like, it doesn't make any difference. The user will get the same savings rate whether they're going through a star or not. So most of them will just go through the stars because they'll invest a lot in getting those users, right? But then the star gets like very reliable, scalable, and sustainable accessibility reward, which currently it is at 20 basis points. So that means if a star can attract like 100 million in USDS, that'll give them 200,000 in like sort of free profits per year, right? And that's like, once you've attracted that, if they're just sitting there, 100 million in savings is just sitting there earning the savings rate and getting, like the best risk adjusted return you can get, basically. Then they start like, they're just getting like, they're not taking any risk at that point. They're just gonna get their accessibility reward. So it's like a really nice building up a user base as a star. I think is like a very attractive value proposition for somebody who's like interested in the stablecoin business model and sees it as like a sort of like, this is having a piece of the stablecoin business model is a variable, like it's a valuable long-term asset. The star vehicle is supposed to be like a sort of easy to get started with approach to like, okay, if you just want to go out there, get some users, deliver some high quality savings product, this is the right way to do that, and just get your fair share for kind of like setting that up.
You mentioned one of the most important parts of the success of Sky long term will be its ability to offer a strong savings rate, to offer great yield that is, a yield that attracts people in. And obviously that yield has been very effective so far. If we look at the chart, here's the chart of money supply, it was, pretty steady for DAI around this 4 billion number until you guys launched. You launched Sky was it in the fall, I believe? Is that correct?
Yeah.
In the fall?
I think it's just around there. Yeah.
Around here.
It was September 18, if I remember correctly.
Right, right. And so since that launch, and particularly since the new administration in the US came into power, there's been much more of an attention and an increase in stablecoins, much more belief. And also, with everything that's happening in the economy, people are looking for yield in new places. But we've seen this incredible rise of basically doubling your money supply from 4 billion to 8 billion. And you've been able to do that because, like I said, corporations like Milk Road, like us, we're taking our treasury and we're putting it in USDS because we trust it. It's great risk adjusted yield. One of the big things that I've heard you talk about and the team talk about is the next stage of yield is bringing private credit on trade. And this is an RWA trend that we've heard a lot of talk about. What is happening with Sky looking into investing in private credit and then using that yield, which would be a higher yield than a typical treasury yield would be, a little bit further down the risk curve? Talk to us about what you're doing there and how you're thinking that through.
I mean, so first of all, I think private credit for stablecoins is that's often referred to as the holy grail for stablecoins. To if somebody can like crack the code on that. I mean, the reality is that this is probably the end stage of like this sort of hyper financialized, super intelligent AI powered, blockchain finance rails that are coming sometime in the future. But I mean, it's still a while off because I mean, obviously, the immediate problem with private credit is it's like I mean, a currency has to be liquid. That's the most important thing with it, and private credit is like pretty much the least liquid thing you can find, right? So it's like I mean, but then the point is that it should still be like it should be possible in theory to make private credit liquid if you can access enough data and you can tokenize it and you have enough, blockchain powered AIs and traders and funds and institutions and so on actually able to price it and trade it. So if we can get to that point, then it'll just be like the best way to make a currency is to directly have like, I mean, to basically like cut out a lot of the middlemen that are sort of running the financial system today and adding a lot of friction to it, right? If you instead have a currency that just like directly it's just directly backed by the real economy that it exists in. I mean, that's just like really cool and desirable, obviously, and should create a lot of efficiency and a lot of value for everybody involved, right? And that is definitely, I mean, that is, I think, a system like Sky and the stars and like all the kind of the layers of like protection and also mechanisms that help create liquidity, it will enable that eventually. But in the short run, I don't see that as the right thing to like focus on immediately. There's a lot of like low hanging fruit of stuff that can be done to just, I mean, like when right now, if you look at USDS, like I said earlier, right, it's like 50% backed by USDC. So rather than try to do sort of small private credit deals for a very small amount of the total circulating supply, which is the only thing that I think would be possible currently, given like sort of I mean, and just because it would, in any case, if you want to start getting into that, it's gonna, it's very difficult to get started with, right? You have to gather a lot of data and experience to start building up that capability. But what makes much more sense to do is to figure out something where a lot of that, like several billions of USDC that is earning a subpar yield, putting that into something that gives a higher return. That is like the big opportunity in the short run. And then as that's happening, so it's kind of like a step-by-step thing, right? Then you can add, like you do a lot of like several billions of more better returns. Then perhaps that allows USDS to provide an even more competitive Sky savings rate. And then also it builds a more Lindy effect. It builds a more like brand equity. So actually it sees even more inflows and even more USDS in circulation. And then the challenge might become more like as the USDS is growing, just maintaining that like decent return as it keeps growing and not having it sort of fall apart because you run out of opportunities. That's probably like, I mean, that could be the challenge for the foreseeable future. But then from there, like bit by bit, eventually again, with enough like AI, with enough like futuristic imagination, eventually you should work towards a point where a currency really is backed by the real economy it exists in. And the stars could kind of do that bit by bit, right? Some of them might try it and then blow up because they end up with like for liquidity, like the duration risks and that kind of stuff. but eventually
Mhm.
some might start actually cracking the code on that. And of course, it's not also that simple. It's not just like the stars try it and then eventually it works. A lot of this also relates to the Sky core having to regulate this properly, and that's like a big part of the kind of the bottleneck of how fast Sky can grow is like the quality of the regulation when the core of Sky sort of regulates how the stars can actually generate USDS and what they can use as collateral, and kind of like their safety boundaries that they're not allowed to step outside.
Very interesting. It's interesting to think about. I like that line of a stablecoin could be backed by the real economy and the businesses in that economy, as opposed to being backed solely by the treasuries issued by the government in that economy, as is currently really the business model. Super interesting. When you think about the future of stablecoins. Right now, obviously, one of the big questions that is, really everybody around the world is asking is like, where does this trade war go? Where do tariffs go? And I don't expect you to have the answer to that by any means. But it brings into question US dollar dominance. That's one of the things that is being brought into question. There's a lot of people that are saying, hey, we might not trust the US anymore. We want to move out of the US dollar. Stablecoins really rely on the US dollar right now. What are your thoughts when you think about the future of US dollar dominance versus other currencies and how stablecoins play a part in that?
Yeah, I mean it's a crazy moment for someone who has worked. I mean, I've worked with stablecoins for more than 10 years, right? And it's pretty much like a wrapper around the US dollar, and it's like the US dollar that's the real thing that people care so much about. And now potentially there's going to be all this like devaluation and just like trade barriers and I mean I think it's obviously very hard to predict anything, but there's definitely a real possibility that the US simply does not want to have this reserve currency status anymore because of what it does to industry and so on, depending on your economic ideology, I guess. And so in any case, there's a real possibility that stablecoins and other currencies might actually become popular in the future, because up until now that has just not been a possibility. Like there's no example of any other stablecoin than US dollar stablecoins having any kind of success, but that might actually change. And in the past, a lot of stablecoin systems, including Maker, were looking at how could you, like, I mean, if you already built this decentralized infrastructure for a USD stablecoin, can you just like copy paste that and then do a lot of stablecoins in parallel and have that actually make sense? And turns out it's not that easy. And then it also turns out that there has not been any demand for that historically. But now it's like an interesting moment for Sky because, first of all, with the star model, that allows, again, like individual founders and innovators to kind of put some skin in the game and basically take the lead on, I believe there's a business case for like this thing, and so I'm willing to like sort of do the groundwork and so on if I then like get a proportional upside to the amount of risk and the amount of work I've put in, right? And so that approach could actually be used to create like USDS clones of in other currencies, like so to sort of operationalize that practically without requiring a bunch of top-down bureaucracy at the Sky core level and having Sky core governance sit and sort of try to make decisions around what currencies are going to be popular and which ones aren't, and how to bootstrap them and all of that. So the capabilities there because of the fundamental characteristics of the stars. And now the demand might actually be there some point in the future. And then sort of in parallel, just because it basically dawned on me and others in the ecosystem that the stars do enable relatively easy, like a relatively easy process for actually having multiple stable coins in parallel pegged to different currencies. There is like an effort to actually design the ability for stars to actually launch like a Sky stablecoin pegged to the euro or to the CNY or Singapore dollar or whatever is going to be popular. And again, what's really cool is it doesn't have to be Sky that has to make that sort of top-down decision. It's a star that actually has to drive it and that has to kind of ultimately would have to put a lot of capital, but then also get a lot of the upside for doing this. And so that system is sort of coming along nicely in time for all of this craziness that we're now seeing, which I don't think there's gonna be any kind of immediate impact. But if you look at like
No.
historically at like how world reserve currencies have changed in the past, what kind of happens is you have sort of the moment where like the empire the empire ceases to exist, right? And you just have it just becomes the core country, which I think might be what's sort of happening now with the change in the world order. And then it takes like a couple of decades, and then over the next couple of decades, the world reserve currency changes. So it's not something that will happen overnight, but it could be an extremely bold bet to make, right? And it could be something that would have a lot of upside if, like, somebody that manages to like bootstrap a new category of stablecoins, that's going to be very valuable, right? And then because with Sky, it's possible to sort of like offer up that opportunity to somebody and be like, here's the Sky infrastructure. It sort of handles the whole thing. But the question of like, what's the market case and how to do it and how to execute it and so on, like, that's sort of up for grabs. And whoever does it, they also get the majority of the upside of pulling it off, right? And that's what I really think is so. I mean, that's what's so nice about this new paradigm that Sky's introducing, that it's like it's leaving a lot of money on the table for like the top founders in the industry to come and do real stuff, right? In the past, it's like you have to go and launch a shitcoin or do some scam or try to build like 200 new blockchains or something if you wanted to actually, like, if you were someone with a lot of drive and you wanted to actually get funding and do something, because it's so hard to like break through in like the real business models like stablecoins. But with Star, suddenly that's like the barrier to entry actually becomes very low. And I mean, compared to like, I don't know, raising like $200 million for a new L1, right? It would be a lot easier to raise a couple of $1 million for Star and then actually being profitable right out the gate, right? And having sort of decentralization right out of the box and all of these things that are available with the Star agent framework.
Mm-hmm. Okay, I want to touch on two more things before we let you go. Tough to keep this interview short, so thanks everybody sticking with us today. I want to talk about AI agents and machines using stablecoins, because I think that you mentioned that a few times. And then I also want to talk about Sky's buyback program. There you go. I called it Maker. I said I was trying so hard to call it Sky all episode. I want to talk about the buyback program and what's happening there. First, let's talk about AI agents and machines using stablecoins. Can you paint the picture for what you see as the future here?
So I think for like, I mean, just in general, the way that humans interact with stuff increasingly will be intermediated by AI. And that's fundamentally because humans are pretty irrational. With AI, you can give everybody sort of like a hyper rational agent that can sort of help them like make better deals when they buy stuff, and pick the better interest rate when you put money in the bank or something like that, right? Like it seems like that over time, that the fact that everybody has a super intelligence in their phone will make them make very rational decisions. And suddenly, so when that comes to stablecoins, I think suddenly the strategies that worked in the past, which was very much like this kind of like network effect, entrenchment, sort of a brand awareness amongst humans, that suddenly I think it's going to shift much from like sort of being out with the humans and in the brains of the humans, and being much more like the facts around what is actually the return you're providing, what is actually the stability, what is actually the risk profile, not based on what some government says or what some authority says or what the advertisements are saying, but just like the hardcore data, the hardcore facts, right? So that's like how, so that's what I think is a very good niche to optimize for, because I would imagine it's going to grow a lot. And just generally, it seems like, it's kind of like a no-brainer to focus on something like that. Because it already today, like I said earlier, like it covers already today this segment that's called mercenary capital, right? So if you can like if you can be the top destination for mercenary capital today, and you can actually turn that into a business, then you're going to be well set to handle all of the trillions of AI agents that are going to manage everybody's money in the future. But then the question is like, how do you make a currency and a savings rate that is optimized for an AI that is hyper rational and likes to look at data and so on? And the answer is, well, you have to use AI for that, right? You have to yourself deploy as many hyper rational agents as possible and go through all the data and find the best possible assets, and just purely looking at the facts, and sort of not compromising in any way other than actually trying to model and understand the real risk and the real return, and have proper diversification with as few like bells and whistles as possible, and as much like facts and raw data. Fundamentally, like, I mean, blockchain just enables this really well. DeFi enables this really well. So that's why I think like DeFi will naturally win, and you will see it adopted everywhere. And my thesis is like the banks and the institutions, they will adopt blockchain, crypto, DeFi, and AI simultaneously, basically. So it'll sort of like fit together, and that's like how you do it. Is like blockchain is like the ideal way for these like purely digital systems, like AI software agents, to kind of like touch the real world and get things done in the real world, and also get the data out of what they're doing. And so Sky and the stars are like an entire economic framework that is like natively built around this paradigm, right? That the whole thing is like digitally native. The whole thing is structured to be optimally transparent for AI systems, that in turn also have mechanisms to sort of interact with it and to help optimize it. And in doing so, generating value for themselves, right? And again, and then the most basic unit of this is the star itself. That like the most basic thing is you come, you set up a star, you capitalize it, then you have better ideas around how to allocate capital than the others, and that lets you generate alpha and profits that goes to yourself. Most of it goes to yourself, a little bit goes to like the collective, right? But then that becomes a competition of who's the best at then actually using AI.
Mm-hmm. Mm-hmm. Mm-hmm.
And then it
And
like feeds
you're
back, right? So then the AI agents that are the users are using to make the decisions, it looks at like, okay, well, this system over here, I mean, look at that, it's all rational, it's all the data is all there, there's no like obfuscation and bells and whistles that's made to look good for humans. It's just like pure raw data, it's just the facts. That's what they'll prefer, right? And if you look at like banking systems and kind of like traditional finance, so much of it is like theater and stability, and like central bankers like making strong statements and that kind of stuff. But that's not gonna fly in the future, right? The future is gonna be more about the real world.
Mhm. It's a great point that an AI agent is not going to make decisions the same way a human makes decisions, right? A human makes decisions very much based upon their own biases and their own judgment, and a lot of that does not have to do with fact. It has to do with marketing and their recognition of a brand and their trust of a brand. Whereas an AI agent is going to make their decisions not on the look of a logo or the most recent ad they saw or what they heard most recently about that company. They're going to make that decision based upon the facts of the underlying infrastructure of the company and the underlying infrastructure of the product and what the product offers. And if it's the best yield that they can get and this in the safest way, then that's what they're going to decide to do. It's a really, really good point. How far do you think we are away from this future? That's the one thing it's so difficult to predict right now is, are we talking months or a few years, or are we talking decades?
Years to decades, I think. So I mean, of course, already now, I mean, a lot of the stars, both something like Spark, but also like the ones that are still being incubated and will launch soon. I mean, they're obviously using like ChatGPT for all sorts of like daily tasks, because that's already how most, no, I don't, not most humans, but that's already how a lot of humans work, right? They use like ChatGPT to automate like the sort of tedious tasks. And there's stuff like, you have to report things like, what are you doing? You have to kind of like structure a bunch of data to be like, I did this thing and it complied with the regulations, so that's why I'm allowed to deploy your money here and there and so on, right? So that some amount of that type of work is already being automated with AI, right? But it's like not nearly as flashy as like what you would expect. And like the kind of flashy part of it is, I don't think there will ever be, I don't know, but like I think it will creep up on us. So it will never really feel like some kind of magic the way it's used in reality, because it'll come slower than you expect, right? Like ChatGPT is so cool and can do so many things, but it's going to take a long time before it like fully like controls real time allocation of collateral. And by the time that happens, we're just going to be so used to like machines doing stuff that it won't really necessarily feel that like that much of like a game changer. So the way to think of this, I think, is like this sort of steady, continuous, like step by step, like whole front progress, right? So I think that's kind of actually what's really important, and the way to look at this and to determine who is like taking the right approach in AI is, some are gonna be like sort of pick a kind of one point and be like, oh, I can do some really flashy stuff with AI here. And then it's like sort of one particular like Potemkin like showcase thing of like, look at this thing, it's all AI. when I think in reality a much more measured and ultimately more effective way to do it is this sort of like you can actually apply it everywhere, like literally everywhere, but it's still quite limited where it actually doesn't get in the way. So there's almost any topic, if you sort of look in long enough, you can find a way to do some AI in a way that's actually going to save you time. But it's not really that easy just yet. So you should not be, yeah, it's like you have to look across the whole space of possibilities, but then be like sort of careful around where do you actually do it and when do you focus on just getting things done. Yeah. And I think as so many people fall in this trap of like doing AI for AI's sake, right? And we just had a whole like cycle in crypto of like AI coins and AI this, AI that, right? And it was all, like none of it did anything, right? It was all like AI for marketing sake, and it's amazing how crypto could do this. That it like made AI lame, and now like AI is sort of this like toxic thing, right? That like now it's like, oh my god, it's AI. Well, that's a really bad sign because they all went to zero, right? And that's
Yeah,
so like yeah,
yeah.
that's so typical crypto.
You could thank the crypto casino for that.
Yeah, yeah.
Okay, final thing I want to touch on before we wrap here is one thing we talk a lot about on the show is when we're talking about investing and tokens you can invest in, we talk a lot about buyers and who's the next buyer of that token. And one thing that's very interesting when we look at Sky Maker is one of the biggest buyers is the buyback program that you guys have set up. And that is buybacks have kind of gotten I don't know that they've gotten the best reputation in crypto. Everyone's mainly because I think a lot of people haven't been able to do efficient buybacks yet. We still don't really have a model that works well for it. It's still experimental. But Sky's really leading the way with your new buyback program that you announced. Just walk us through how much are you guys buying back right now, and walk us through what the plan is.
So right now, I think the system is buying Sky tokens at a rate of 500K per day, and I think that just got increased to 700K, so that'll go into effect soon.
Wow.
But it's also like it's the the governance around how the buybacks happen is set up so that this can change rapidly depending on market conditions. So now we'll see, given what's happening, we'll see how it sort of how it'll change. Because one thing's for sure is like the 700K rate is not sustainable, as in the system is not earning enough net revenue to actually keep that up indefinitely.
Mm.
So it's kind of moving back and forth. One thing, like the thing that's guaranteed is that the buybacks will continue permanently. So originally Maker was designed to have these like buybacks that would never stop, but they were like stopped many times and for long periods of time over the years. Now they're back for good and they will never stop. And it's like the whole sort of financial model of Sky is designed around that there simply cannot be situations where buybacks don't occur. Like it can happen that there are these like insolvency events where a bunch of tokens have to be printed to recapitalize the system because something went very, very bad. But as long as the system has like any kind of scale, basically, it's designed to always do buybacks as a sort of derived from the scale. Well, oh, sorry, actually, let me clarify that because that's actually another point. Is like, so the problem with buybacks is, and this is something Maker didn't. This is also a big reason why it sort of stopped with the buybacks for a long time, is that Maker has done a lot of really stupid buybacks at very high valuations, so where it basically just like wasted money getting nothing done. So that's the kind of the reason for the sort of the comeback of buybacks is that there's now a system called the Smart Burn Engine, which is meant to eventually, when it's like fully operational, to always be buying and burning Sky tokens whenever it sort of makes economic sense to do so. And that's then based on the economic metrics of the protocol. And it's up to Sky governance to sort of continuously refine basically an equation that determines should buybacks happen and at what rate should they happen. And the idea is that what should be happening is if the price suddenly crashes, but the fundamentals haven't changed, then it should just like turbocharge massive buybacks, right? To buy the dip, basically. But if the price is really high and it's sort of irrationally high potentially, then instead the right move is to just gather dry powder, right? Just accumulate USDS, just accumulate lots of cash and build up a huge buffer so that you're really ready with like just massive amounts of dry powder to buy if there's a crash in the token price and the kind of the equation for what is the right price points to buy at and how much should you buy given different price points. So that's so it's sort of ready to really take advantage of that.
Yeah, it really shows the power of this buyback program in terms of its flexibility, its adaptability, its governance, and its ability to create a sustained buyer for Sky tokens, which obviously has an impact on those looking to invest. The other thing that really stands out to me is we previously had Dan Tapiero on the show, who's one of the larger growth investors in crypto. There's not a lot of growth investors in this space. And he talked about how one of his focuses is on the fundamental thesis, which really points to, hey, which are the crypto projects that are making strong revenues that a liquid fund can go invest in right now. And that's another big buyer, is these large growth funds that we're going to see, I think, a lot more come into the space. We did an episode a few weeks ago with Coinbase about their institutional investor report and how they were talking about all their funds are looking to get more invested into DeFi projects as well. So a lot of really strong tailwinds for the DeFi sector and the stablecoin sector of crypto right now. Rune, absolute pleasure to get you on the show today. Thank you so much for sharing all your thoughts and for breaking it all down with us.
Yeah, glad to be here. Thanks for having me.
Before I let you guys go, I wanted to tell you about Avalanche Summit coming up in London. This is May 20th to 22nd. It's going to take place at the stunning Hatfield House. This is a gathering of builders, investors, founders, all focused on the Avalanche ecosystem. It's going to be a one-of-a-kind of experience, real direct access to a lot of the top founders and top builders in this space. Don't miss your chance to be part of Avalanche Summit. If you're in London or around Europe, you should want to check this one out. Grab your ticket today. Link in the show notes if you want to sign up. Thanks so much for listening in again. Everybody, have yourselves a great day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.